Hello everyone, and I'm just going to wait a few seconds just to obviously see if everybody can join us today for this national branch meeting with our friends from Vantage Fee Protection. So just give it a couple of minutes just to make sure everybody can join, which I think will be quite an interesting session talking about Hmrc activity. So I hope everyone is well, and some of you I may have seen obviously either at the London or Birmingham conference, but just say that I'm Ian Hornsley. I'm one of the IFA directors and the Eastern Region Ambassador and Chairman of the Members Advisory Committee. Just a few matters, just so obviously with all of the online meetings, obviously bear with us if there is any technical issues, either with sound or visuals. Hopefully everything will go okay today. Obviously from a questions during this webinar, I've spoken to both Paul and Anne from Vantage, and I think we'll be happy to take questions as we go along instead of at the end. I think some of the topics that they're going to be talking about will be very relevant to those in practice and their clients. So I think it'd be nice that we all engage and ask questions as we go along, if you feel minded to. Obviously, you put the question in the chat box, which I will then see, and then obviously I will then ask one of the speakers to reply. So you don't have to come on screen or anything like that. Obviously, you can see us, we can't see you. So, and of course, information following today's session will be shared with all of you in any event. Just to remind you, from an institute point of view, there are some upcoming CBD events, especially face-to-face. As you know, we have now commenced this year the regional networking events, and the ones that have taken place so far, which hopefully many of you have attended, have gone down really well, both with members and other professionals that have been coming along. And obviously in this respect, what we're trying to do is encourage members to come along to the networking events, not only just to meet fellow members like you did at the branch meetings, but actually bring some of your own professional contacts with you, because I think it's important not just for you to show other members of your contacts, but to bring people like bank managers, lawyers, and other professionals to see what we have at the IFA, and to actually for them to understand a little bit more about what the IFA and us as members do. And it's about spreading the word. As I said at conference, you know, I'm proud to be an IFA member, and I believe that as an accountant in practice, you know, we are best placed to look after those micro, small, medium businesses. So as you can see, we've got a couple of networking events booked in. 7th of July, the Southwestern Wales, that's in Bristol, and I will be joining Jonathan Barber there. So if you are local to that area or feel inclined to have a little drive or train, then do please come along. Unfortunately, I can't make the Scotland one, but Duncan Walker, who is the ambassador, is obviously putting on their second event in Scotland on the 28th of July. Planning is underway for other regional networkings, both in the North, Midlands, Eastern, Southern and London regions. And those dates will, of course, appear on the IFA website. And of course, you will get your normal event emails coming out. Just to remind you, obviously keep checking the website, and obviously your free weekly CPD event emails for updates. Webinars to watch out for again in September, Q3 tax series. I know over the last 2 years, well, obviously when COVID hit, we went online. The tax series have been a great success. Obviously these are paying events, but don't forget, obviously the year is motoring on. So of course, for you to ensure your CPD is up to date, bearing in mind it's 40 hours per year as a requirement, then these are obviously good webinars to obviously tick a box for CPD, but also about us continuing learning, especially around the areas of tax. But also obviously in September, we have the quarterly financial reporting update. And then, as you see, other webinars in July, end-to-end cloud practice software. This is all stuff that I think from an institute point of view, we want to put in front of you as members, because this is about what's happening out there and new, obviously, things coming to the market. Other things to keep an eye on, obviously, digital platform. Again, there's the web address, as I said, the free weekly email, and the monthly member benefit emails. So I'm just going to stop sharing my screen. So I'm very pleased to have with us today Paul Rigney and Anne Grundy from Vantage Fee Protection. As I've always said over the last few years, as an accountant in practice, I believe that having fee protection is best practice, and it's an offering that I believe we should be offering to our clients, especially in the current climate after COVID and all of the government initiatives that, of course, are causing some hot collars going on with clients and whether they've done things right, job retention scheme, and I'm sure the guys will say more about that during their talk. Vantage Fee Protection obviously is a great supporter of the IFA and a strategic partner. And just a little bit about our speakers today, and obviously many of you may have met either Paul or Anne. Probably Paul gets around more than Anne, but I know, Paul, you've been to quite a few of our events up and down the country. Paul himself is ex-revenue many moons ago, so he's been at the other side of the coalface, but also in practice, and with Anne as well. So Anne is the senior claims person at Vantage Fee Protection, so she is actually again dealing at the coalface with their customers, their clients, in what activity is coming through and where they're making claims. But both of them have over 40 years experience in practice in different fields, and over 15 years each in fee protection. So I'm going to hand over to Paul and Anne to start their presentation. Again, if there are questions, then please do put them in the chat box, and I'll try and monitor them, and I'll interrupt as we go along. So over to you.
Thanks, Ian. Thanks very much indeed. Good afternoon, everybody. Ian, can I just check that you can see the slides on screen?
Yes, we can.
Yep.
Yes.
Okay. Thanks very much for that. So Hmrc are gearing up, question mark or exclamation mark or both. The honest truth to that is yes, they are. Are we seeing increased revenue activity through our claims handling part of the business? Yes, we are. So over the next sort of half hour, 40 minutes, we're going to have a look at what the revenue are doing, how they're going to achieve it, what the targets are, and how that's going to impact on taxpayers in general, your clients, and your role in protecting your clients through the course of any inquiries which arise. Okay, so why isn't that moving on for me? So here's the first glitch. There we go. So Hmrc now are coming under increasing political pressure. The heat in the political kitchen is getting quite high now. The black hole is very evident for everybody to see in the country's finances, and the revenue are feeling the pressure now to start filling what is the perceived tax gap in the UK. The information that was released the last couple of weeks by the revenue shows that they believe that tax gap to be running at about 5% or £32 billion a year. So that gives the revenue plenty of scope to drive activity and increase their yield out of inquiry activity. So targets have obviously been given to the revenue in terms of what they are expected to achieve, and we'll have a quick look at how they're going to look to hit those targets and how they're going to implement that activity over the forthcoming years. The main tool that the revenue have got at the moment and continue to have moving forward will be Connect. So we're seeing better targeting using the data and information that is held within Connect. That information is being used to drive more organized and targeted campaigns. So there is a lot less shotgun approach here and a lot more planned activity using what they believe to be solid data rather than working on hunches and perceptions. We are seeing an increased unwillingness for the revenue to walk away without a result. Although in terms of full inquiries, they're doing less and less full inquiries each year, the ones they are doing, they're doing with greater attention to detail and more quality. So they've obviously decided that more quality is better than quantity. And we're seeing the costs incurred in dealing with full inquiries continuing to rise year on year based on that revenue's unwillingness to walk away without getting the result they seem to want to achieve. Final bit of the targeting and sort of increased activity is going to come around through that growing penalty regime that will be introduced with MTD. That's going to be a key factor over sort of 2024 onwards, and I think that's going to have a growing impact on the way revenue drive their activity. So we have a look at Connect. Most of you hopefully will know what Connect is and how it works. It currently has over 30 billion lines of data. It's huge. It was designed by British Aerospace for the revenue. And the good thing about it, as far as the revenue concerned, the AI part of it, the artificial intelligence part of it, is that it's learning. Its ability to generate reports and utilize information is growing on a daily, weekly basis. It's learning how to use and deliver information and reports. So legislation states that Hmrc may observe, monitor, record, and retain internet data which is available to anyone. It's regarded as being called open source material, and it can include anything from news reports, information gathered from internet sites, any other government department, but mainly Companies House and Land Registry reports, and any blogs or social media posts on Facebook, Twitter, Instagram, as long as that has had no privacy settings applied to it. The revenue can gather and collect that information and store it into Connect. Simple as, very easily coming through. And the growing numbers of information, is massive on a daily basis. So social media posts, merchant acquirers, so information requests from the revenue to any merchant acquirers for details of information being processed, quite within revenue's remit. Banks and building societies have always had to submit details of interest earned to the revenue. Beauty of this system is now, as soon as the banks and building societies submit that information, it's linked with taxpayers' files in seconds, not months or years, as it was a piece of paper being transferred from office to office across the revenue, done in seconds. The tax evasion hotline. During the pandemic and the job retention schemes, the tax evasion hotline was receiving thousands of calls a week and continues beyond that to receive information from spurned wives, partners, jealous neighbours, aggrieved employees. That hotline, continues on a daily basis to receive information, and each piece of that information will be inquired into and actioned. It will not be ignored. Property-based information, whether that's land registry, letting agents. My daughter works for a large firm of estate agents locally. They received an information request, and that information request was he wanted all details of all landlords on whose behalf they acted and details of all rents received and collected on their behalf. and that's just fed straight into Connect and is linked directly then to the taxpayer's returns. Mortgage applications, yeah, really weird one. But every time a taxpayer makes a mortgage application, the revenue know about it. And details of income that are shown on that application, right, whether those income details are right or wrong, are provided to the revenue. Rich source of inquiry activity for the revenue there, as people tend to potentially inflate their income, or potentially, you know, not been declaring the correct levels of income to the revenue previously. Foreign data, we all know about the offshore disclosure facility and all that foreign data that is received in from banks and other financial institutions across the world. So a massive stream of information available to the revenue coming through. We can't ignore it, you shouldn't ignore it, and we can see through the claims we've seen and other experiences we've learned about how that is used. We had one specific case I'll just refer to you recently. I've got a friend who's still an inspector in the revenue, and he was doing an inquiry case. The accountant and his client attended the meeting during the course of the inquiry, and the meeting was going quite well, so the taxpayer and the agent believed. And the question was asked, how many holidays have you had this year? Yeah, we've had our usual holiday. We've been to Skegness for a fortnight. Really? Okay. Then would you care to explain these? And the inspector slid across the desk the screenshots of his social media posts, showing him and his family enjoying 2 weeks in Florida in a 5-star hotel. Yeah. All information just found off Facebook. All they'd done is carried out the search on Facebook or Instagram, wherever it had come from. And you know what? So you're telling me you're living on £300 a week. I'd like to know how you afforded to pay for that fortnight's holiday for you and your 3 children. So that is as simple as that. That inquiry ended up settling with the taxpayer paying somewhere near £45,000 in additional tax. So lessons to be learned on just simple things. Your clients need to be very careful what they post and how they post, especially if they haven't set privacy settings on it. So all this information that's being collected then has to be used by the revenue, and it drives various different courses of action. So campaigns, and we've all seen those, whether that's offshore disclosure, landlords, medical profession, lots of campaigns using data that's being collected. More specifically, task forces into specific areas, and we've seen task forces into a lot of the hospitality industry, into fast food, takeaway type of businesses, where there's been evidence of significant fraud. It will drive the normal course of investigations, the traditional Section 9A, 12A notices and aspect inquiries. Criminal prosecutions. When I worked in the revenue and when I was still in practice, the revenue would deliberately go out of the way to avoid criminal prosecution. The aim of the revenue would always to go down a civil route and reach settlement. That mentality has changed completely, and the revenue now are very willing and have no reservations of pursuing criminal prosecutions where they believe they have a reasonable case of success. And you only need to look at the number of criminal prosecutions the revenue are now carrying out to realise just, you know, where that activity is leading them. And all this piece around naming and shaming is all part of this new world of the revenue. You know, they don't hide behind the old civil service beliefs anymore. Their activity is very public, and they're happy to put that out there in the public arena. The government agencies will share information and will continue to share information, doing it more and more easily and freely. One of the big changes I've noticed over recent years is if you complete any government form these days, you're likely to be asked to put your national insurance number on it. And the only reason they want your national insurance number is because that's the easiest way for the government to link any piece of information into Connect. There'll still be errors, but those percentage of errors are quite small, actually, considering the volume. You know, you might be applying for a medical certificate as an HGV driver. You'll be asked to provide your national insurance number. So if you've just applied for a new HGV medical certificate, why would you do that and go through the cost if you weren't working or trading as an HGV driver? Yeah, simple, easy things that are picked up and processed through Connect and shared across that government agency piece. In terms of campaigns, some numbers there just around the pounds, shillings and pence that have been achieved from those various campaigns that have been carried out over the last sort of 10, 15 years. So the biggest success story there is obviously the offshore disclosure facility, £512 million coming through from that. And you can see the other ones on the way down and where they've worked. Campaigns are still being carried out. They will continue to be carried out. Some of those campaigns there are not been closed. They're still there and you can still use them. And I think there's a really good case that actually voluntary disclosure is still a really good route to resolving any potential issues one of your clients may have. And I would recommend that voluntary disclosure route if you know you recognise something that needs repairing and correcting coming through. So the revenue have been successful in terms of their campaigns and their activity, driving it really, really well. In terms of task forces, task forces can tend to worry accountants, especially if they haven't had much knowledge and experience of a client who's been caught up with one. So in terms of how they operate, most of them are geographically based. They tend to focus a task force into a specific area of the country at any one point in time. And those resources are multidisciplined teams. So there will be experts in pay-as-you-earn, VAT, corporate, personal tax. You'll have the whole range of skill sets working within that specific task force. Most task forces these days come under the heading of cross-tax reviews. So we would regard most inquiries coming out of these areas as being cross-tax reviews, where the multidisciplinary teams are not looking at just one area of tax, they're looking at all areas of tax as part of one investigation. It's a more efficient and more successful way of working. The old-fashioned way of working is the VAT team might go in, carry out a VAT compliance visit, find errors, mistakes, conclude their inquiry, make the tax settlement, walk away, and then perhaps, if you're unlucky, and it wouldn't always happen, they would tell the corporate tax inspector that they might want to have a look at the accounts based on the errors they found in the VAT. Didn't used to always happen. That link was never always there. But if your client gets picked up by a task force or part of a cross-tax review, then that will automatically happen as part of one ongoing inquiry. We're seeing
Paul, I was just going to sort of come in if I wouldn't mind, but I think also national living wage, I think is obviously, I think the revenue's tasked with that as well, aren't they? So, which is a big area. So,
yeah, national minimum wage is definitely on the increase. In the number of it's disgruntled employees. They think they're working far too long hours, so it doesn't work out at whatever the national, their rate of national minimum wages or living wage, as the case may be, and they're quite intensive. They start off with, we're coming to have a look, and it generally they ask for half a dozen items, maybe pay slips for somebody or whatever, and then they do an in-depth meeting, and those in-depth meetings go through absolutely every part of a company's working day for every single employee. They want to know what they do, how they do it. You know, do they have breaks? Don't they have breaks? Do they get paid breaks? You know, are they sat at their computer screen for 9 hours or whatever the case may be? It's those first meetings for national minimum wage and living wage are very, very intense, and they expect, you know, the clients to know what goes on within their business.
Yeah, and I think if you find that if you've got clients in the care sector or within hotels and hospitality particularly, there is big questions about accommodation, meals, and how those form part of that national minimum wage, and they are common pitfalls that are completely wrongly calculated coming through. So definitely to watch out there. In terms of cross-tax reviews, we're seeing a lot of them into those key areas of transport, hotels, restaurants, and hidden wealth areas, just to name a few of the ones we're seeing on a regular basis. So I suppose in a way, areas you would potentially expect to see, but those transport, hotels, restaurants tend to be businesses where there's a lot of group companies for various reasons, and the whole group will be inquired into across all areas of taxation. The most expensive one I've seen is one that went to limit of indemnity of 125,000. Well, the actual costs were over and above that at the end of the day. It went on for about 2.5 years. Massive. The revenue can make unannounced visits, and they can make those visits with warrants. To attend with a warrant, they have to have had the approval of a senior high-ranking officer, and there will have to have been significant grounds for that to have been granted. If it's an unannounced visit without warrant, then your clients do have rights with regards to allowing admission to the property and which areas of the property they are allowed to see, but you need to tread carefully around that. There will be CEAT officers walking around with USB sticks trying to download as much information as possible. It isn't about taking away boxes of paperwork or anything like that particularly. It is all about this USB sticks and pieces coming through. And they will tend to work to a business review aid memoir where they've already done research of the business, the type of industry or sector that it's in, and they'll know exactly what it is they are looking for in terms of that visit. In terms of clients and agents, I suppose the key thing is if you get an unannounced visit, don't panic. Ask why the visit is required and why it's been necessary on an unannounced basis. Yeah, without being difficult for the relevant safety checks. So ask to see the identity cards of the visiting officers against the names shown on any inspection notice. They're only allowed to bring in the people that have been authorised to be in attendance. Establish whether the notice of inspection has been issued by the tax tribunal. If it's a warrant and an inspection notice, if it's come from a senior high-ranking officer approved by the tax tribunal, then this is as good as a police raid. You're not walking away from it. They're going to walk through your door and take whatever they want. Decide whether to allow entry onto the business premises or not. If it's an unannounced visit without an inspection notice from the tribunal, you can withhold the right to entry, while you certainly at least contact your accountant, contact your solicitor, whatever. Don't be steamrolled. Don't allow clients to be steamrolled. Rights still exist. It's about being professional, polite, reasonable. And if the visit does go ahead, ensure that any information, documents, etc. taken by the revenue are business related, and ask for a copy of the completed business review aid memoir that they will have come with and been completed during the course of the visit. You have or your client has a statutory right to have that document provided to them. If your client operates his business from residential property and the business is operated from a single room within that property, it's important that that is the only area the revenue officers are allowed to enter. This is a search of business premises, and if those business premises are part of a residential property, the only part of that they're allowed to actually go to is any part used for business purposes. So again, you know, if you've got clients who you think may be at risk, then it's worthwhile perhaps just having a chat when the opportunity arises, just to say, if this should happen, these are the 3 steps you need to take. Pick up the phone and speak to me. Check the identity of the officers who are attending, and check the notice to see what rights the notice has given or not given them to come through. But certainly, you know, don't panic and just step aside and let the revenue run riot. In terms of investigations, what we're seeing at the moment, okay, so COVID pandemic affected the government departments just in any way as any of the others. Most of the staff disappeared to home working. I suppose a great percentage of them still are. But more importantly, they were tasked and challenged to work on 2 completely new benefits, the COVID job retention scheme and the self-employed income support scheme. That took most revenue personnel away from day-to-day work into other areas and other projects. So revenue activity in terms of inquiries pretty much ground to a halt. We are now seeing that completely come full circle. And if you look at the period, the first half of 2021, the revenue up just over 102,000 inquiries, and that was up from 75,000 in the last quarter of 2020. And it was almost 4 times higher than the all-time low of 27,000 inquiries in the second quarter of 2020 at the start of the pandemic. It increased its tax take by 29%, up 14.2 billion in quarter 1 of 2021. And that was up from 11 billion in the first quarter of 2020. So again, you can see how that yield has already increased just in that short period of rebuilding their activity. If you look at the second half of 2021, the revenue launched over 137 tax investigations in that 6-month period. That's up 9% from the same period in 2020, and equates to 1,062 inquiries a day. Not the most we've ever seen, but still a really staggering number. That's an awful lot of activity. We know for a fact that the government has announced that it's now investing an additional 161 million in the revenue that's ring-fenced to further boost that activity, and a move that they think will bring in an additional 3 billion in additional tax revenue. So a pretty sound investment on a return of 161 million, 3 billion. And there is no question that the revenue will not be expected to achieve that. So revenue have obviously now scaled the activity and are focused on reducing the tax gap once again.
Just quickly, Paul, just going to a quick question. You may want to put a detailed answer on the chat box yourself, or Anne might, but it is all around the officers visiting the home and whether they take something personal that might relate it to business, and would the officer carry further investigations on the property. So I suppose really it comes back to what you were saying, that obviously the taxpayer needs to be careful and understand, and I suppose as accountants we need to explain that if this happened to them, you know, they do have rights, especially if it's in their home, and that officers are not allowed to take stuff that isn't directly related to business?
Yeah, it is. There's a fine dividing line here, and a lot of it depends on the terms of the inspection notice that has been granted by the tribunal, if it's a tribunal granted one, and those are the ones you need to really worry about, because as I said earlier, those are as good as a warrant to search premises. We've had a case recently of an accountant who contacted us. His offices and his home had been raided at the same time, simultaneously. There were large amounts of cash found on both premises. A lot of very expensive jewellery was discovered. And the revenue seized all that money, all that jewellery, including his passports. And that was within the rights they had of the notice that had been given, because they thought he may be an escape risk to exit the country, and they removed that from him. It's since turned out that accountant was carrying out very fraudulent behaviour, and he will shortly be attending the High Court in Scotland on those charges. So personal, you would argue that jewellery, that money was personal effect. It may well be that the revenue see that as proceeds of crime.
I was going to say, Paul, that I think that this sort of touching on money laundering, which I think obviously both the revenue and the police and the National Crime Agency are using more and more to get round, especially from obviously with warrants, because they can just use that as a reason to and I suppose really it comes back, and this is where we're learning as members from you guys about, well, what do we say to clients about their rights? And obviously our job is to, one, not just obviously protect our clients, but really police our clients, because otherwise we could be tied with the same brush. But basically explain to them, what has happened, and be on the end of any call to make sure that the revenue are not overstepping the mark unless they are allowed to. So
yeah, I think, Ian, it would possibly be a good topic for one of your tax sessions, webinars, around revenue rights, taxpayer rights on visits. I think it might be a good session to put on one of those tax webinars that you do, and cover it off in a lot more detail.
Absolutely, thanks, Paul. I'm just conscious of time as well, so if we motor on. So
yeah, we'll do. The slide I've just put up there came out of the latest Hmrc, latest Treasury report into Hmrc. And if you read that there, it says small businesses represent more than 95% of businesses in the UK. So that is IFA practice members' target audience, those SMEs. In 2021, they were defined as having turnover below 10 million, which, yes, we know, and typically have fewer than 20 employees. The big interesting point there is we know that the revenue think the tax gap is about £32 billion. The revenue estimate that half of that, 15.1 billion of that tax gap, sits in your client base, in the SME market. So if you look at that as a risk, where the revenue activity is going to be driven, it's potentially into your client base, because that's where they believe the biggest part of the tax gap sits, in any one single area. So be mindful and wary of that. So we expect to see a lot of our accountancy practices with a lot of SME clients to be the ones that have increased revenue activity coming through. And if you look at the mid-sized businesses there, they think a further 5 billion tax gap sits in that mid-sized business category. Motoring on a little bit, so moving towards MTD and 2024, the revenue have believed for a long time that carrying out tax investigations after the event, and sometimes 18 months, 2 years after the end of a accounting period, is not the most efficient way of policing and securing tax losses. So the aim of MTD in part is to enable the revenue to carry out inquiries in greater detail in year. So, if your client submits a quarterly return then within 2 weeks you might get an inquiry notice based on information that is sitting in Connect that doesn't agree with that quarterly return that's already been submitted. So it needs a lower ranking officer to carry out that simple task of repairing that return. So it's cheaper, it's more efficient, and it means they will get the tax yield and any penalty within weeks rather than in years. So the whole way revenue activity and inquiries will work beyond 24 will start to change drastically. These are some notes, again, from the revenue report in what they want to achieve and why they're changing. I think if you read that, there's some really good comments in there. That a well-designed system prevents non-compliance before it can occur, while making things easy for taxpayers and allowing HMRC to focus resources where they can make the most difference. Very simple, that, isn't it? But actually quite a sea change in the way they operate. Our work covers almost everyone in the country. The most efficient way to collect the right amount of tax across these vast groups of individuals and businesses is for HMRC to guide the taxpayer by intervening before anything else has the chance to go wrong. I don't know if any of you use the Revenue's SA system to complete and submit SA returns, but if you do, if the Revenue think the figure you've put in that box is inappropriate or wrong, you'll get a pop-up message that says you might want to consider that, and here's the notes and guidance to help you. You've seen that, and if you decide to ignore it, then actually the Revenue will take the view, well, we did flag it, we did highlight it, you chose to ignore it, and that will be part of the penalty consideration if anything happens further down the line. Those prompts are there, they're there for everybody to see. And those digital prompts that have come out of those returns, a digital prompts program has estimated 3.4 million users displaying personalized messages to support customers on their digital journey. That's a hell of a lot of pop-up messages giving taxpayers guidance and instruction on what they should be putting into those returns as part of that process. Tackling non-compliance, Revenue's stated aims again are that their approach is going to be underpinned by cutting-edge data analysis, Connect, which we use to identify where tax is most at risk of not being paid. From this insight, we can design tailored targeting and proportionate interventions to address these risks. We have carried out detailed risk assessment and analysis on over 1 million taxpayers in the year 21. Now, you don't see that, you don't know it's happening, but it is happening. All that risk assessing, profiling is happening and occurring in the background, and they're going to start using what they're learning from that to become a lot more effective as part of closing that tax gap. So the future, we know the Revenue will continue to be under that pressure to close that massive black hole in the country's finances. So your clients are going to be at greater risk of inquiry and the additional accountancy fees which will arise in dealing with any investigation. I suppose this is the sales pitch. So if you haven't already got a fee protection scheme in place, you might want to wish considering how this could help protect your fees in the event of inquiry arising, help you retain clients because you're not asking them for additional fees, and generating potentially an additional income stream for yourselves at the same time. As part of having a scheme with us, you would get the really valuable additional resource of having access to our tax and VAT advice lines Monday to Friday, 9 till 5:30, and also your clients would have free unlimited access to our employment law, health and safety and general legal advice lines, which again, in the current climate, I think is really, really important with changing working conditions, changing working hours, etc. Having access to that support service is really important. That's me done. So thank you for that. I don't know if any of you got any more questions.
I've got one actually from Michael. How common do you think the digital prompts will be when businesses are entering their R&D claim values? As I know this is an area they are reviewing heavily, and I think we all know that that is an area that HMRC are really considering at the moment. I suppose it really depends where the digital platform goes and how far across, because obviously R&D only applies to limited companies.
Yeah, that's right. Yeah, the digital prompt's not going to be a thing there because obviously the revenue don't have their own platform for CT returns. So you're going to be using a private software facility for that. I think, the R&D market has been driven in a direction, in a way, not encouraged by the revenue, but certainly not stopped by the revenue because of lack of resource and attention to the claims that were there, and the political instruction that they wanted R&D investment. They wanted it to be successful, and I think there's a very loose approach to how that was policed and governed. The direction of that has obviously changed now.
Can I just butt in a minute, Paul? So
yeah.
What we have noticed in the claims department, okay, for the R&D claims, they are now starting to come from FIS, the Fraud Investigation Service, and they are being very bullish, and I mean very bullish, in that they are telling the clients that there's nothing wrong at the moment. They're not telling them that there's anything wrong, but if they find something wrong, they will be criminally prosecuted. So it is a completely different tack to what we've noticed in the past, where there've just been ordinary inquiry notices into R&D and how they have put the reports together. Have they done the due diligence in the past? Now they're actually standing there and saying, we're not saying there's anything wrong, but if there is, you might be facing a criminal prosecution. And what they're trying to do is crack down on the R&D supporters that actually, that aren't necessarily doing the due diligence that they should have done in the first place.
Absolutely.
And are stepping on the bandwagon, for want of a better expression.
I think if I come in here, and I'm conscious time's moving on, so I don't know if you want to stop sharing, Paul. I think we've got a couple of people potentially leaving, and it's just, I want obviously everybody to hear what Han has to say, because obviously you're at the coalface of what's coming through. So, but just going back to R&D, I think we just got to be careful as members that our clients are getting contacted by companies that may not necessarily be as professional as ourselves. I hate to say that, but that is happening in the market. Certainly, I've lost a client who I told didn't have a claim. They shouldn't have had a claim, but they went off, and I don't know what's happened to them. But I hand over to you because I'm just conscious that time's moving on.
Yeah, certainly. I mean, as I say, we see different claims from not just R&D. We literally see them from an ordinary Section 9A notice where it's asking for half a dozen bits of information, to a Section 9A notice where it's asking for the full records. They are very, as Paul says, they are far and few between for the general public, as I would call them. But what we do see, the cross tax are definitely, for SMEs, are definitely on the march. These multitask forces where they're sending the world's wife and the dog to look at your client is not an unusual factor anymore. And they are time consuming. There is no question about it. You think you've answered all the questions. You think, that's it, we're off. We're on the way to concluding, and then the next stage is you get another 40 questions, over all sets of the tax system. So, you need to have. Personally, I would always say have fee protection. I've been doing it for a long time, but I would, if we have clients ring up and say, "Oh, should we renew this?" You have house insurance, why would you not have fee protection? It's and as a practice, I can't understand why anybody wouldn't want to show that they're giving their customers the best possible chance of protecting themselves.
I think from my point of view, and obviously, and to my fellow members, I went for many years not having fee protection. and then started talking to a few people, and certainly I wouldn't do without it now. I think there is a situation where, you know, I've had clients say to me that, oh, well, that's all right, because you've already done the work, there's nothing else to do. And then you have to explain to them that actually, well, it's not quite as easy as that, because they, the revenue, do want this, so it's still about my time. And then you have that difficult conversation with the client about how you charge for your time, or you take it on the nose and actually you do it for free, which actually we're in business as accountants.
Yeah.
And I think that's the fine balance of, but I think what Paul said, you know, obviously this isn't a sales pitch, this is about learning today. But I think from my point of view, members, accountants should understand what fee protection is, because I've certainly had new clients come to me who have come from other accountants, and the first thing they ask is, do you have fee protection? Because they start understanding that it is available. Now, of course, with all of this, obviously, like any insurance, you've got to make sure that your client is being a good boy or a good girl, because if they're not, then they're not going to be covered, and you're not going to be covered. And I'm sure you've had cases like that as well. Just quickly, because of time, I think coming back to the current activity, I suppose really, you know, from job retention scheme, is that still fairly prominent?
Absolutely. I mean, we're now starting to see those come through, because as you all know, I've never seen the revenue gear themselves up so quickly. When the pandemic hit, normally, well, look, let's look at MTD. How many times has that been delayed? I've given up counting now. However, furlough came in, the world went into pandemic, everybody was sent home, and the furlough scheme was set up within a fortnight. Yes, they amended it, they changed the rules. I'm not saying they didn't, but actually people were being started to making claims in April. You know, I think it was the third week in March, wasn't it? We all got sent home, and the following week, you know, the following month, people hadn't got money and they were making furlough claims. And they always said, we will pay out now and we will check later. Well, now is the time for checking. And I would say we've not seen many of the self-employment grants come through yet, because they're still filtering through. Of course, last year was the first year you put them on, and really the first year was almost you can have the money. It's going to be the fourth and fifth payments where they're going to start drilling down. Did your client really suffer? Did they not really suffer? Was it where you meant to have it? We haven't seen any of those come through yet, but we are definitely still seeing the job retention, the CJRS claims coming through. And some fail, and some have been done absolutely spot on. The trouble with us as client, with you as accountants, you may or may not have done the furlough claims for the clients, but that still relies on the fact that the clients have done what you asked them to do. They don't do that, unfortunately. Some of them, I mean, I'm sure we've all had clients where you think, are you actually going to do what I've asked you to do? You know, you've covered yourself off because you've done what you've told them. You put it in writing. You've said, are you furloughing these people? Are you not furloughing those people? Yes, we'll make claims. But if they don't do what they're supposed to do, we had one accountant. I'll give you a quick example. It was husband and wife and son had a business that had been running for many years. Son was in his early 30s. He'd been brought into the business, and it was only the three of them. And the pandemic hit, and the gentleman, the dad, rang the accountant and said, we're furloughing ourselves because we can't do what we've been doing the way we do it. So we're going to furlough ourselves. Can you do us the claims? And he went, yeah, no problem. So that coincided this coincided with his first month of his next quarter of VAT. Okay, so he did furlough claims for 3 months and rang the client and said, right, I need to do your VAT return, but it should be quite simple this month because of course you've been furloughed. And they went, oh no, here's all the records. And he went, hang on a minute, you've earned more money in the last quarter than you did the previous quarter, and you've all been furloughed, and there's only the 3 of you. What's been going on? And they went, oh, we've switched everything to online. So who's been dealing with the online stuff? Well, we have. So you've been working? No. Well, yes, you have. You can't have it both ways. You can't earn more money doing it online. And they'd swapped the way they did it overnight. They had to then put in amended furlough claims and pay the money back because they had actually been working. They hadn't been furloughed at all. And that's just a prime example of a client telling you one thing and then going and doing another. And it's only because that accountant actually completed the VAT returns. And how many of your IFA members have clients that do their own VAT?
Yeah,
he picked it up for the simple reason that he'd been doing the furlough claims as well. You know, he'd done everything for this client. So
I mean, I think you know, in general, I think obviously as accountants we have to remember our profession. You know, we have to be professional. I say to my clients, guys, you know, not only am I here to help you and keep you compliant, but I'm here to protect you. And that's where you've got to have a relationship with your client that actually, you know, they need to tell you everything.
Yeah.
And you need to direct them in a way that actually they're law abiding. We all understand tax is tax and claims are claims, but actually we have a duty, you know, an ethical duty on us as members of any institute that we make sure we do the job right. And you know, we talked earlier, didn't we, about, you know, the revenue, obviously increasing activities, obviously looking at criminal proceedings that they never really used to do.
Yeah.
You really don't want to be tied with the same brush. And I suppose that's the message. But I think, just conscious of time, that actually, you know, I think from my point of view, you know, it's about, it can be a lonely world out there for accountants.
Yeah.
And I think they are very reliant on their clients. And I understand that we're in business to make money and people need their clients to pay them. But it is finding that line between making sure that you are on the right side of the line and that you are making sure you're doing things correctly for your clients. And I think that's where, from my situation, from a plug for you guys at Vantage or any fee protection, that it's about having that backup of, you know, I think any of us, once we see that letter, that copy letter coming through from the revenue asking, you know, for the making the inquiry into your client, in some respects, sometimes you feel like they're making the inquiry on you because you're the one that submitted the figures, and it can be quite, you know, intrusive. And whilst it's nothing to do with us, because we are assisting that client, you know, sometimes I think, and even I've done it, even I've got my colleagues here, sometimes picking the phone up and having somebody outside your firm to actually help you and guide you, I think ticks a lot of boxes.
Yeah.
And do you want to just sort of
half of that, and that's half of my job actually, Ian, is, you know, yes, I am a claims consultant, and ultimately I always explain to clients, we're a bit like jugglers as claims consultants, because I work for Vantage and I have to keep them happy because they pay my wages just like you pay your staff wages. But we have accountants that we have to keep happy because we want to be helping them and seem to be helping them and guiding them in the right way. Because sometimes you just lose sight of the fact that actually the revenue are just doing a job just like you're doing a job. And we also have the insurers because they ultimately underwrite everything. So without any of those, you know, we've got to be a juggler that keeps all those balls relatively level. But predominantly, we're here at the end of the telephone to be able to talk to somebody and guide them. And, you know I've said to you in the past, you know, on cases, this is the way I think you ought to go.
Yeah.
Or you'll say to me, do you think I'm being bullish if I go this way, Anne?
right?
No, actually I don't, you know, and it works both ways because I've worked in practice, because I look at, that's what I do every day. I look at investigations every day. You only get one every so, fingers crossed, every so often. And that's what all your IFA people will only get one every so often. And I think that's why you think, as you say, you get quite offended. Why are they looking at my clients' figures? What have I done? I put those figures on the return, and you feel quite isolated. Whereas every day I walk into yet more investigations, because that's what I do. I look after investigations and I look after the accountants to guide them and their clients in the right direction. And sometimes that they are difficult conversations. You do have to have a difficult conversation and say, well, actually, I don't think you're not right. The revenue was right.
I'm just looking at the chat box, Anne, and John, one of our members, has just put, thanks, folks. Big Brother rolls on.
Oh, does he just?
And funny enough, that's very true, because as Paul said at the beginning with the Connect system, you know, the revenue know, and I say this to my clients, the revenue know more about you and then you know about yourself. And I think that's the world we live in. We have to accept it. It's out where we're going as our job as accountants, in advising clients, I suppose, really, in protecting themselves. Really.
Yeah, I have to say, social media and Facebook, well, it's quite nice from a personal level that you can connect with your family and your friends and tell everybody. The revenue go, yes, thank you very much. And Paul's quite correct in his, you know, in the way he explained his friend that's also an inspector of taxes, where he got a client simply because he said he was off to Skegness for a fortnight, and there was pictures of a holiday in a 5-star hotel, and the revenue pick up all of that. It, you know, if you've not protected yourself on Facebook, every time you've got a painter and decorator who says, oh, I've just done another lovely job for a local businessman, you know, it happens. They pick them up. That's what happens. They get picked up because everybody can, you know, anybody can see it, and it's there.
Just to come to a conclusion, I suppose, from your experience, what do you think is the next big either campaign from the revenue or an area that you think they will target?
I think R&D is going to be the one that is started already. I don't think we've seen the impact of it yet, but it's started already. They are going to drive into that market really hard, and some of that drive into that market is actually being encouraged and driven by some of the more respected R&D providers, boutique providers.
I was going to say exactly the same thing, Paul. I think we've just got the tip of the iceberg at the moment, and I think it's going to managed service companies, providers. There's 2 of them that are currently being looked at very, very closely, and it'll have a knock-on effect. And if they lose their cases, it's going to affect thousands, and most certainly your IFA members will find that their clients are going to get affected by it big style. Again, that's the tip of the eye. But R&D, I think, is definitely going to be a way forward, don't you think?
Yeah, just a quick comment on that before we wrap up here. I think if you've got a client who's using a boutique to do an R&D claim, and you have a feeling that really isn't, well, there shouldn't be an R&D claim there. There's a bit of me says that if you're amending a CT or a CT 600 needs amending for that previous year claim, that I would have the boutique do it and not yourselves. And I take that view from a PI perspective, because if you haven't actually amended the CT 600 or done the report, you've no comeback from your client if the revenue turn up with a FIS notice from the Fraud Investigation Service. So I think there's a bigger piece to consider there as well.
Okay, well, thanks, guys. I just obviously monitoring the chat box, and obviously I just had a couple of members say that the email sent out by the Institute says it's starting at 1 o'clock. Obviously, I'm going to have to refer that back, guys, to obviously the team, and I apologise if that's the case. I know the national branch meetings are always at 12 o'clock for an hour. But I will ask Jonathan, who is in the background here today, to just take a note of that and come back to you. Obviously, the session is being recorded, so of course it is available for you. And I say Jonathan can come back, or the team can come back to you and apologise. Just quickly, obviously, you know, I think these sessions are always fantastic. and tax and HMRC is an area I think most of our members get really interested in, rightly or wrongly. Obviously, at the last two conferences, we had HMRC talk about MTD for obviously self-employed and landlords, which obviously is now going to start from 2024. I think the impression I get, it is going to happen. My view is, look, you know, it's a bit like RTI, auto enrolment, all those things that have been chucked to us over the last few years. You know, we all get scared of these things. We all don't understand it. We need to probably embrace, certainly from my point of view, I think with the digital arena of online accounting systems and all that's out there, you know, I'm now talking to clients about real-time information about their accounts, not 9 months after the event. I think it's good. I think we just have to cope as accountants with how we deal with our clients and explain to our clients. And obviously from an institute point of view, you know, we will be providing more information. We will get the agencies like HMRC to keep us updated, provide more webinars and meet us face to face so we can be involved in that development. And I think coming back to you guys, Paul and Anne, thank you for today. I think it's always interesting to have you. And I know, I think, you know, for members, whether they're here today or any of our members, you'll be happy to have a chat with on a one-to-one basis. Obviously, I know, Paul, you've got the team around the country, so it doesn't matter where we are as members. I think you're happy to send somebody out to have a chat. There's no commitment. Yeah. And I think my advice to members is please do speak to them, because I think it is best practice. I think it's something that should be offered, and there's different ways of offering it to clients. You know, I put my hand up and be quite honest, I actually make money out of fee protection, and because I'm in business running a practice. So I think in that respect, you know, let's try and support these guys because they will support us, and that's the biggest thing here. Especially if you're a sole practitioner, or even if you know you're in a small firm, I find them very beneficial. I pick the phone up, probably try and cut a few corners sometimes, and but I do find, because I don't know everything, and we have to be realistic, guys, that as you know, whether you've been in accountancy a couple of years or over 40 like I have, we can never know everything. And that's where, in my view, that actually the team, especially if you, with any fee protection company you use, they will have a helpline that is really a shoulder to cry on. So I think that's enough for me. Hopefully everybody's enjoyed it. And Paul, always lovely to see you, and thank you for your input and support of the Institute. And thank you everybody for attending. Again, sorry for if there's been some miscommunications, but I'm sure obviously the recording will be available. Have a pleasant rest of the day, and obviously upcoming weekend. Please do go to the website, because obviously all the webinars, all the new face-to-face meetings are listed. You know, let's obviously get involved with the Institute. And again, from a personal note, you know, from the ambassadors around the country, you know, we do need assistance. We need the next generation. So if you're mindful, then obviously do put your hand up, because we're always looking for volunteers. So thank you very much, everyone, and have a great day. Thank you.
Yes, thanks everybody. Bye.
Bye, guys.
Bye.